So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to The Daily Call from Option Alpha. Hey everyone, this is Kirk here again at Option Alpha, and welcome back to The Daily Call. Today we're going to be talking about how to adjust short strangle option strategies. So as a basis, short strangle option strategies are a strategy in which you are selling a call option and a put option out of the money from where the stock is trading. So for example, if a stock is trading at $100, you might sell the 105 call option and the 95 strike put option. And the idea is that the stock trades between your strike prices and you profit at expiration with the stock not breaching or breaking out of your strike price range. So in our case, we want the stock to trade within a $10 range between now and expiration. Now the trouble comes in when the stock starts to challenge one side of your position. So instead of the stock staying exactly where it should be at $100, it starts to move higher towards 105 or starts to move lower towards the 95 strike. And so the idea behind adjusting is that we first do not move the challenged or tested side. So if a stock is moving against our call strike, we are not going to move or roll up our call strike. And the idea behind this is that we don't want to give ourselves an opportunity to compound our losses by digging our hole deeper. If we are challenged on a position, or if one side of the trade starts losing, we don't want to roll that side higher. Because what we've all seen before historically is that stocks have a tendency sometimes to have long moves in one direction that last many months in some cases. And so if we keep moving our challenge side, let's say our call spread side, and we roll our calls higher, we're going to do so for a debit. And then we roll the calls higher again for another debit and again for another debit. And what this does is it basically eats away all of our potential credit, and it also digs us potentially into a hole where we are paying to maintain the strategy. And that's not what we ultimately want to do. So again, the first thing is we don't move the challenged or tested side. The second thing that we want to do is we want to then adjust or move closer the unchallenged or untested side. So again, let's assume that the stock is now rallying towards our 105 call strike. We do not touch the 105 short call option. Instead, we move up our short put options to a closer strike price. So we might close out of our 95 strike short puts, and we might then reopen a 100 strike short put and start to move up or adjust up our short put side of the trade. And the idea behind this is that we are being opportunistic about what the market is giving us. With the market rallying higher, that short put option that we sold at 95 is now going to show a mini profit. And so we can close that profit, reopen a new put option closer for a higher price, and increase our overall credit in the position. And by doing this, we then widen our break-even points by the additional credit that we take in. And it's a very mechanical process that we go through. It's the exact same process that we use time and time again here at Option Alpha, and it's what really works. So that's the best way to adjust short strangle option strategies, is to roll up and adjust the unchallenged or untested side. Now, if you want to see live examples of this, you can just search our website for short strangle adjustments. You can also check out a very nice podcast that we did on our weekly show, optionalpha.com/show72. So just the number 72, optionalpha.com/show72, where we talked about what these adjustment triggers might be and how you can use deltas as a trigger point to tell you when to adjust a trade when it's starting to go against you. As always, hopefully this helps out. If you guys have any questions at all, please let us know. And until next time, happy trading. Thanks for joining us on The Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to play smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on The Daily Call from OptionAlpha.com.